Investors, welcome back to the channel. For today's video, I'm going to be walking you through how you can take some high risk and also get some high reward whenever you are investing. Now, if you are new to the channel, my name is Tim. I'm that guy that started off this portfolio with only $65 and I've now grown it to $1,424 as you can see right here. For today's journey, I'm going to be giving you a portfolio update and I'll be walking you through the growth stocks in my portfolio and show you how high risk could sometimes equal high reward. Now, let's go ahead and get started. So, in addition to me starting off this portfolio with only $65, I made a commitment to myself to go ahead and add $250 every single month to this portfolio in order for this portfolio to grow over time. In addition to that, that $250 got spent through 10 different stocks. Yes, I am a stock picker. If you are new to investing, it's highly advisable that you go ahead and start investing with ETF. ETF is perfect for you to give you something that's diversified and very low risk. And while you are investing in ETF, you're going to be learning how the stock market works. Now, the whole point of me having this channel is to show you that it doesn't matter what amount of money you have. The most important thing is for you to get started today. There are several brokerages out there that allows you to get started with investing no matter what amount of money you have by use of what's known as fractional shares. Now, I will be leaving some links in the description below. If you do not have any brokerage accounts or you're looking for an additional brokerage account, check out those links in the description below. So before we go ahead and get into the growth stocks, let's go ahead and do a quick portfolio review. So for the 1 day outlook, the portfolio is down 0.4% or $573, which is not too bad. For the week outlook, the portfolio is up $3.15 or 0.22%. And for the month, the portfolio is up $82 or roughly around 6%. Now, this is only based on investing. There's nothing else going on to this portfolio. It's just consistent income into the portfolio of $250. That $250 automatically gets spent through 10 stocks. And then there was two that's going to be added, which I'm going to show you next. And that's all it is. This is known as my set it and forget it portfolio. There's no brain power that goes into this portfolio. So next, we're going to go over to the 3-month outlook. For the 3-month outlook, the portfolio is up $94 or around 7%. And for the year to date, the portfolio is up $95 or roughly 7%. And lastly, we're going to go ahead and check out how much the portfolio is up over the year because this portfolio started off in December. So let's go ahead to the year outlook and see how the portfolio is doing. So the portfolio for the year has been up $103, which is around almost 8%. So the portfolio is not doing bad so far. Now let's go ahead and get into the actual stocks I want to forecast for today, and that's going to be the growth part of the portfolio. So the portfolio is divided into three different categories. The first part is going to be the value stocks. The value stocks you guys are familiar with, which is going to be Amazon, Microsoft, Meta, and Google. In addition to those four, the next part of the portfolio is going to be the dividend stocks, and that's going to be Chevron, Realty Income, Altria, and Pepsi. And then the last part of the portfolio is going to be the growth stocks for the portfolio, and those are going to be Oscar, New Holdings, Bitmine, and Rigetti Computing. Now, I want to show you guys how you could use high reward to get high risk. I'm just going to be focusing on these four for today's video. Let's go ahead and open up the most risky, and we're going to start from the most risky to the least risky. Here we are on Rigetti Computing, and for those of you guys who do not know, Rigetti is in the quantum sector. Quantum has been unproven thus far, hence this stock is going to be extremely risky. The reason why I have chosen to go ahead and get into Rigetti Computing is that Rigetti focuses on the majority of the aspects of quantum computing, meaning they have the software, they also have the hardware, and they're trying to gain customers. Most of the other quantum stocks, they only focus on either the hardware or either the software. So with Rigetti, I'm getting all three of them compounding. That's going to help me grow the portfolio. Now, at the current price of $19.08, based on my dollar cost average, and this is the second month that I have been contributing to Rigetti Computing, my average cost here is $17.54. The total market value is $14.07, and thus far I'm up roughly around 8%. Now, this is just the second month that this stock has been compounded in my portfolio. And on a regular basis, just like the other stocks in my portfolio, I have roughly $10 being allocated to Rigetti every single month in order to grow my portfolio. Now, thus far, just like the other stocks with Rigetti, I have a recurring investment of $10 that's going to be contributed towards Rigetti every single month in order for me to increase my position with Rigetti. So Rigetti in the portfolio is going to be the most risky stock thus far. So the next stock in my portfolio, which I think is going to be the next level of risk, is going to be Bitmine Technologies, and that's going to be BMNR. Now, the reason why I think this one is going to be the second highest risk is because it's in the crypto sector. Crypto is very, very risky. So always make sure to do your own due diligence before getting to any of these stocks that I feature on the channel. The reason why I add these stocks to my portfolio is because I have gone ahead and have done my own due diligence. So please go ahead and do yours as well. So with Bitmine Technologies, Bitmine usually focuses solely on buying of Ethereum and staking Ethereum. So I like Bitmine because it gives my portfolio exposure to the crypto sector. Thus far, just like Rigetti Computing, this is only the second month that I have contributed to this stock, and my average cost is $22.60 right now. Thus far, I'm down around 2%, which is not bad. Just like all the other stocks in my portfolio, I do have a recurring investment of just $10 going to this portfolio. Now, I want you guys to know, especially you guys new to the stock market and new to investing, at any single point in time, I could go ahead and just put thousands of dollars into this portfolio because I have grown account portfolios several times over. The point I'm doing this for is that anyone that comes before me or anyone new to investing could see you do not need to have thousands of dollars. You just need to get started investing right now. So now I have given my portfolio some exposure to the quantum sector and also to the crypto sector. I'm going to go ahead and get into the third least risky stock, and that's going to be Oscar Health. And that ticker is going to be OSCR. Okay, so here we are on Oscar Health, and the current share price is $21.11, whereas my average cost is $14.19. The reason why my average cost is so low is because I have been consistently doing the DCA model or the dollar cost average method. And what that does is that it allows me to just keep putting a same amount every single month in order to grow my position in this stock. Thus far, after having this stock, I'm up roughly around 49%. So basically, the amount of money I've invested in this stock, I've gotten half that money in addition. So as you can see down here, the amount of money I'm sending towards this portfolio for Oscar Health is going to be $10. Now, I hope you guys see something here. For those of you guys who have been following the portfolio for a while, you guys should see the difference here. With all these stocks I have here for growth, the amount that I send on a recurring basis is less than the amount I send towards the dividend part of the portfolio and also the value part of the portfolio. So just keep that in mind in order for you to know how to keep your portfolio diversified and safe. On to the least risky stock in the growth part of the portfolio, and that's going to be the ticker is going to be NU, and that's going to be for new holdings. Now, with new holdings, it gives the portfolio exposure into more fintech. New Holdings is a bank that predominantly operates in South America, and it has been gaining lots of ground, and they're trying to get the banking license to start operating on US territory. Now, with New, my average cost is around $15.22, which is higher than the actual price right now. And the actual price right now is $13.86. Once again, with all the other stocks in my portfolio, I went ahead and did a recurring investment of $10 into growing my position with New. My average total return is I'm down negative 9%. So let's go ahead and round up the video. The whole point of me making this video is to show you that because I'm trying to invest into the growth aspect of my portfolio, I'm willing to take some high risk. The high risk I'm going to be taking is going to be in some stocks that have not proven themselves yet, which is going to be New Holdings, Oscar Health, Rigetti Computing, and Bitmine Technologies. So investors and future investors, there you have it. That's just a quick roundup. Now, The portfolio is growing very nicely. We're currently at $1,424. And within the next two deposits I make here, plus the portfolio growth, we should hit that $2,000 level. So that $2,000 is going to be the next level goal for this portfolio. And once we hit that level, we're going to be getting into some other strategies that can be used to grow the small account portfolio. Now, for those of you guys that made it to the end, you guys must be enjoying these kinds of videos and you guys are willing to grow your portfolio along with mine. So if you have not already, please remember to like the video, subscribe to the channel. If you guys have any questions about the 4 stocks that I have in my portfolio based solely on growth, then let me know in the comments below. Now, on this channel, I do everything I possibly can in order to give you as much information as I can for you to keep pushing your investments.